Dollar. On the eve of important releases. After a significant rise on Wednesday, the dollar is declining today. Market participants are awaiting the release of a series of crucial macroeconomic statistics from the United States. At 12:30 GM, the final estimate of the U.S. GDP for the first quarter, data on durable goods orders, and the U.S. Labor Department's weekly report on jobless claims will be published. The first estimate released at the end of April indicated a 1.6 growth in the U.S. economy in the first quarter. The second estimate was 1.3, with a forecast of 2.5 growth. The dollar weakened following this publication. The decline would likely have been stronger if not for the upwardly revised estimate of the U.S. economy's growth in the fourth quarter of 2023, from 3.2 to 3.4. The slowdown in economic growth might prompt the Federal Reserve to act more aggressively in easing monetary policy. Therefore, market participants are paying close attention to the release of such an important macroeconomic indicator. If the GDP growth slowdown is confirmed, it will once again fuel discussions about the Fed's imminent shift to a more dovish stance. Despite the strong macroeconomic data from the U.S. last week and hawkish statements from Fed officials regarding monetary policy prospects and accelerating inflation, the dollar has yet to benefit significantly. Buyers are hesitant to take more active measures, likely awaiting new growth drivers. However, today's publication of the final estimate of the U.S. GDP for the first quarter, especially if it aligns with the forecast, 1.4, may be less influential on the dollar's dynamics than tomorrow's release of the Core Personal Consumption Expenditures (PCE) price index. Economists predict a slowdown in the PCE index in May to 0.1 and 2.6, from 0.2 and 2.8 previously. Worsening GDP growth indicators and slowing inflation will reignite discussions about the likelihood of a Fed rate cut in September, putting pressure on the dollar. Conversely, an improvement in these indicators will reduce the likelihood of the Fed adopting a more dovish policy this year, likely leading to a significant strengthening of the dollar. If today's and especially tomorrow's U.S. macro data exceed market expectations, we can expect at least a retest of the 106.0 level, with a potential rise towards 106.45 and 107.0. Alternatively, the first signal for new short positions could be a break below the support level at 105.54. However, long positions remain preferable, considering the hawkish rhetoric from Fed officials, while major global central banks are gradually shifting to more dovish policies, along with the continued strong macro data coming from the U.S.